What's going on, everybody? Welcome to Futures Trading with NinjaTrader. I'll be your host, Nate, and of course, we'll be hanging out with Jim Cagnina, who's a senior education and training specialist over at NinjaTrader. But first, let's go ahead and play that intro. Jim, what's going on, man? Good morning to you.
Good morning. Good to see you. How's your weekend?
Weekend was good. I actually got a lot of cleaning done. I think I threw out like 2 to 5 bags of trash. So definitely a lot of cleaning.
Nice and productive, it sounds like.
Yeah, pretty much, man. How's yours?
Pretty good. Glad it's over, ready to get into it. A lot of work to do this week and be very interesting this week.
Well, let's go ahead and put up your charts here and then tell me what you're kind of looking at and why you think it's going to be an interesting week.
Well, I mean, there's a lot of things going on in the world. We're entering into the FOMC's quiet period. So we're not going to hear from, different governors and different presidents and Powell until next Wednesday. So the focus now is kind of off of that news cycle and on to everything else that's going on, which includes Europe and Gazprom and all that stuff. And earnings also this week is going to come out. A lot of stuff's coming out. A lot of stuff already came out. And here's the S&P 500 futures chart right now. And we're really in the middle of what I'm going to call my hamburger here. We got support at the bottom in the S&P around 3780-ish. We have resistance at the top around 3915. And we're kind of range bound right now. We're kind of struggling sideways in there, and this may or may not continue until next Wednesday. I'm not sure, but it's again, it's pretty significant support and resistance we're surrounded by.
Well, knowing the information that you know based off of that, are you short anything? Because right now I've got some puts on SPY as it's having a trouble getting above VWAP on my 10-minute. But do you have any positions on? Are you looking at anything, especially on the ES? We'll get to the others here in a moment.
Yeah, and the ES right now, right at this moment, no. We did have a real quick short day trade this morning. We went short, and that worked out okay. Let me just show you the 10-minute chart here on the S&P because I have it right underneath. And this is where we're at. It's a really nice volume profile. And I mean, when I say really nice, it's like bell-shaped curve. It's Gaussian distribution. The point of control is relatively in the middle, not really a little south, but it's not skewed that bad. There's no double distribution. It's really nice. And so I'm thinking today we might have some value area trading where we're going to be bouncing off of the value area low, which is about where we're at right now, and maybe even getting down to the first standard deviation band here of the VWAP and trading up to the top standard deviation band. That's what I think. Now, again, news could come out, things could change. But right now I'm thinking this point of control is going to be solid for the rest of the day, and we're going to trade around it.
Now, that gold bar, is that something special, or is that just, hey, this is where the price action is at the moment?
No, well, I don't know how special it is, but it's called the point of control. And all it is just a histogram bar based on how much volume was traded at that given price. Right. Actually, I have it set 4 ticks high at that given price range since the start of the session, which was last night at 6 p.m. So it's tracking all the volume here. And I like to consider this price happiness. This is where most of the deals happen today, right around this area here. And a lot of times in a normal distribution day, it acts like a magnet. Not always, but sometimes.
Right. Now, so here, okay, let me kind of dive into a little bit more if you're okay with it. That volume profile, right? If it kind of breaks above the control, right? That gold bar, if you will, the volume, it seems like transactions around that price, they decrease. Does that typically mean that like, hey, it's easier to move to the upside because there's not a lot of traders selling necessarily, or is that completely off what I'm saying?
Well, as a general rule, when I tell people is, hey, this is price happiness right now. Yeah. This is price happiness right now. When we deviate from price happiness, then that's when we look at trade opportunities. Right.
Got it.
So on my mind, I'm not going to trigger a buy or sell right now because we're right at that happiness level. But what I would do is I draw some rectangles, as you know I like to do.
Yeah.
And I'm going to generate, hey, okay, here's an area of short-term support right here around 38.90. So I'd be a buyer off of that as an example. And then you can do the same thing on the top side, although it's a little less obvious on where to put it.
Yeah.
I'm going to put it right about there. And you can see these rectangles, again, another hamburger formation. These things are the area of resistance, area of support, and they're nicely positioned against this dotted blue, this bottom of the value area, which is this dotted blue line here at the bottom. And then the top of the value area. The value area is just one standard deviation of volume. It's not magical. There's nothing to it. This is just one standard deviation of volume. If you remember from your high school math, why that's important on a bell-shaped curve. So that's what I'm thinking. So I'd be a buyer down here, a seller up here, and then let the market do what it does, and hopefully we get back to the point of control after I establish a position.
Gotcha. Well, let's take a look at, so when you have a quiet day, like you mentioned with the Fed, right? Are you just simply looking at price action? Because we're also getting kicked off with earnings as well, right? I believe Netflix reports, I believe Tesla reports as well this week. How are you kind of preparing yourself for that?
Yeah, that's a great observation and a great question. So, it always runs through my mind. What's more important? Is earnings more important than what the Fed's doing or not? In this case, I think the Fed overwhelmingly, it's more important what the Fed's doing instead of earnings. We expect earnings to be bad. The banks weren't that good. We had a couple of positive EPSs, which in my mind, I roll my eyes because EPS is based on guidance the company gives you in the first place, and it's always going to be lowballed, right? So I set aside the EPS, and you look for profits and net income and stuff like that, and they were kind of negative. The market didn't care. ES is up 27. You had Goldman, you had Citi, you had all sorts of some of them were good reports. Some of them were good reports. The most interesting thing that Bank of America said was, hey, we did some analysis, and according to our analysis of our customers, consumer spending is hot. Folks are still spending, man. And so there's this damper of demand. I don't know. It's not there yet.
When it comes to, well, actually here, I'll come back to the daily on the ES because I want to close the show with that. But I believe, if I remember correctly, you had a position short on Bitcoin. Is that right?
Yeah.
Let's get a little update for that.
Yeah, still do. It's been a wild ride. And remember, my idea was I want to be short, right? And I have a target around, well, I'll show you where my target is. My target on the downside is 18,195.
Got it.
And I'm short 5 contracts right now. And I've been scaling in, right? As the market kind of goes up, I sell some. If it goes down, I'm waiting. If it comes up, I sell some. Right now, I have a limit order to sell a 6th unit. Right above this R3 today, right above resistance level 3 in the daily pivot at 22,600. So I kind of want the position to go against me a little bit because I want to pick up the 6th unit to give me a better cost average dollar on this trade idea. And again, I'm willing to hold this for a while. If you could do this as a hedge, you could do this, maybe you're hedging some your underlying Bitcoin, or you could do it as a speculative position too. Maybe you're not involved at all. In future trading, you just sell it if you want, buy it if you want. It's multiplicative math, and you don't have to jump over a whole bunch of hurdles.
Yeah, and of course, just for the folks at home, this is a simulated account. However, the information that you're seeing is live. It is real time, and you can definitely check out NinjaTrader on that. Now, before we get too far into things, every morning, you guys are trading and streaming as well. Is that right? It's ninjatrader.com/events. The link and the description, it will be there as well. But if you could tell us a little bit more about that. And I think you also do it at the close.
Yeah. So we have a couple shows. We have more than a couple shows, but every day we have the opening range, which is 9:15 East Coast time. And it's a combination of me and my partner, Tom Schneider. And we go over every single asset class and we come up with trade ideas for the morning. And then we do it at bookended again at the end of the day. The show is called Bars Closing. And then we talked about, hey, what happened to us today? How do we do? Is there any trade ideas at the end of the day? So those are a daily thing for sure. Anybody who wants to come, it's free. It's fun. You can ask questions. We've tried our best to answer them.
Awesome. Love it. Well, are you seeing anything in terms of any other markets? Let's talk oil maybe. Maybe
crude oil.
A bit of movement there.
Well, let's start with the daily real quick. This has been the crude oil market. This is the WTI crude oil, right? This is the U.S. based benchmark. Oops, I'm sorry. Where are we going? There we go. Here we go. This is the U.S. based benchmark, right? There's 3 real big benchmarks. There's the West Texas Intermediary, which is crude with a certain specification delivered at Cushing, Oklahoma. Yeah. Then there's the Brent crude, which is widely published as well. That's North Sea. And then there's the Dubai sour crude, which is in Dubai. Those are the three benchmarks. This particular benchmark I'm looking at, they all are really super volatile. We have.
I'm sorry, hold on. They call it the sour oil. Wait, what was that?
Well, there's sweet and sour, right? So, and what sweet and sour refers to is the chemical, unique chemical characteristics. So, the sweeter it is, I know. The sweeter it is, the easier it is for the refineries to process.
Refineries, yeah. Okay.
And so the less sweet it is. So I know Dubai's less sweet, and then sour is I'm sorry is not. It's sour.
Yeah.
And Dubai's in the middle. So I'm sorry, North Sea's in the middle. I said that wrong 3 times. No in any event, I'm sorry. Yeah, I didn't make those names up. That just came with it.
That's really funny. I'm sorry. I just have to get some clarification on that, but go right ahead.
Yeah. But so, we'll have a channel here, and it's a really wide channel, this parallel channel here. We're in a downward trend, 121 down to 109. I mean, that's basically a $15 channel, and it's pretty wide. I could probably, and I should scooch it down a little bit, which I'm going to do right now. We're in that channel, right? We finally found a bottom here. I'm going to just draw my crosshairs around 92.83. Really big candle here a couple sessions ago with buyers coming back in. Now we're marching our way back up. This 50-period moving average, that's going to be really interesting to me to see if this holds or not. If it doesn't hold, then I'm going to be bullish here for a while. If it does hold, then I'm going to be open-minded here for a while. Not going to be too bearish until this whole energy situation straightens itself out globally. But right now, I'm probably not interested. I'm not interested in being a seller in crude oil today.
Now, you're going to wait for that breakout to happen? Is that where you're trying to go long? Around 105 or not necessarily?
Well, that's a strategy, right? And what out here, let me just I'm going to draw a better rectangle here.
Extend it. Yeah. And by the way, Shannon, while you're doing that, thank you so much for the donation. Really appreciate your support. And then we got a couple of questions. I'll get that here in a moment.
So a couple of trains of thought. One is, hey, if we break through the bottom of my rectangle, which is the area resistance associated with the highest body of a candle in recent memory, and the moving average cross, we're still between 50 and 61% retracement. There's one train of thought. It's like, hey, I want to be a buyer here. I want to wait for a breakout. I want to buy here at 103, 104, and see if we can get up. That's more of a long-term, position trade idea, right?
Yeah.
So, and there's all sorts of different kind of ideas right now. But yeah, to answer your question, that's a strategy that I'm sure a lot of people are considering.
Got it. There was a question in the chat. Let me go ahead and get that up here. What would be a good pair to short against long oil?
Well, if you mean currency pair, you got to go with the Aussie dollar, New Zealand dollar, U.S. crosses, right? Even the Canadian. Those they're highly correlated. Those three. The Aussie dollar probably would be my favorite. If you're talking about currency crosses in relationship to oil, I would focus on those ones.
Okay. Gotcha. Appreciate that. Now, if you're looking to go short, though, are you waiting for that crack of 90 to the downside? Because it looks like you have actually not even 90. It might be like 87, where you've got a little bit of support going all the way back to, I think that might be April 11th or so.
Yeah.
Just trying to get some levels on that. But cool. Are there any other corn or any other futures that you're kind of looking at before I get to the stuff that I wanted to dive in?
Yeah, real quick, just the Euro FX here. We hit parity in the cash market, 1.0000. We hit parity in the futures market. Look at this. Look at this candle in the future. And prices are different between futures and cash. We know that because of the cost of carry. Yeah. The low was 1.0000. It's amazing. It's amazing.
We talked about this on Monday. You said, hey, look out for the parity, and you described what parity was and the dollar there. Isn't it such an easy, and obviously look, hindsight, because you see that it bounced up 2 cents, but isn't it, even before we mentioned it about how the psychological number of $1, was that not the easiest long that someone could have gone? You have a stop loss a cent below at 99, but like it's a smack dab dollar. It was such a big deal. Twitter was talking about it.
I know. And the trading, nothing's easy, right? And right. In hindsight, in hindsight, it's like, we talked about it. It was a self-fulfilling prophecy. It happened. Yeah. And look at the chart proves it. So I don't know. I mean, was I brave enough to do it? No, I don't know. Maybe you were, but not me. It just is a kind of a random. It's really a random number, but it's, hey, now give me $1 in euro. I'll give you $1 a US.
Yeah.
This
I had
area,
it, yeah, go ahead. Go.
This area of resistance right now is really key. Right now, we're barely above the 23.6. We have a really nice rectangle that I drew, area resistance. I would be a seller off of this.
Got it. I'm actually trying to learn how to play fibs after you and I talked last time. So seeing your fib just reminded me that I've been trying to practice my Fibonacci's there as well. And do you like to go and do it on the daily, or I think you also like to do it on the 10-minute? You're okay with it, right?
Yeah, for sure. And it's really it's more of an art than a science, right? So when the low here is obvious. So I have my low set. You can easily set a fib to be at this level, right? So be right here front, in June, we kind of hit this long-term area again of resistance. And that's a legitimate, break in the price action, a legitimate rest, or you could use it up here for the, last time it rested, right? And so that's when I see this kind of formations, I'm like, all right, I want to kind of see them in both places, and you can add them in both places. It's a little bit of an art, but either way, they give you valuable information.
Now, but it works for you when it comes to like the 10 minutes as well, or do you feel like, hey, based on your experience, maybe the dailies and the weeklies and the larger time frame, it works better?
No, I'm going to say the opposite. I think it works better in a 10-minute. I think it works better in a 10-minute. Yeah, because don't forget, you have, for longer term charts, for daily, weekly, monthly, you typically have investors that, are relatively passive. They'll put trades on maybe on a weekly basis, monthly basis, and they're looking at these levels, right? It's in their prospectuses, it's in their disclosure documents, and how they're going to proceed. From a day trade point of view, though, you have, pros, retail, you have systems, algos, all bouncing trades around these numbers, right? Yeah. I'm not the only guy on the planet that has this fib drawn, believe me. And there's probably other ways you could draw it, but like right now, 23.6% retracement. Wow, this is actually a great place to be. Do we want to, continue on with selling? Do we think this is just a little baby retracement and we want to go long again? So these kind of decisions you could make when it hits or it approaches these levels for sure. Look at this, R2, right at that 38.2% retracement, 2 areas of interest balled up into one. Like that is a target on the downside, by the way, for the Euro FX. The trade would look something like this. Just kind of give yourself a ticker so to try to get short, and then the target would be right here where my crosshairs is. This would be yeah.
Typically, I would assume that it's always good if you have, like, say, the fibs line up with, let's say, VWAP, right? It's kind of like, hey, those are like, I don't want to say twice as strong, but necessarily saying, hey, you've got 2 areas of support here. You've got the fib and you've got the VWAP, and of course, same thing on the flip side in terms of resistance as well. Is that fair to say?
Yeah, that's fair to say. You just got an A+. You mastered the Jim Cagnina advanced course in like one sentence. Absolutely. The more areas of interest, the better. So right now, there's a point of control, right, on the euro. 50% retracement, just a little bit below that, and then the VWAP just a little bit below that. And they're within 10 ticks, right? They're close. So this is a really nice area of interest. That's why I think this is a reasonable place to put my profit target. I'm short one right now. I'm gonna throw a profit target in. I think it's reasonable. So anyway, I agree. The more areas of interest, because you have different people looking at different things, deciding that these areas are important. You might just have somebody that's a volume profile trader doing it. You might have someone that's a VWAP trader doing it. You might just have a fib person doing it. When you shuffle the deck together, you got more folks that think it's important.
That makes perfect sense. I know we've got still a little bit more time here, but let's talk about your tip of the week. Let me go ahead and get that intro going here, and then we'll have that ready right now. What you got?
All right. So because the Fed's quiet and then the economic releases in the U.S. aren't too caustic, there's a couple of them. It's geopolitical week for me, right? What's the ECB going to do on Thursday? What's the Bank of Japan going to do Wednesday night? United Kingdom has big PPI, CCI numbers. Will Nord Stream, the flow come back? Will we get the Siberian oil back on Thursday? And will it be at the same volume or less volume? that's a mystery. There's a lot of conspiracy theories saying, no, they're going to have equipment problem. It's never going to come back online. And then there's other folks that says, hey, this is just a routine maintenance week. They do it every year, which they do. And don't read into it. So anything could happen. A lot of stress there just thinking about it. And then lastly, the Rhine River. I have the Rhine River on here. It's it's at a low level. It's at a really low level, worrying everybody about getting commerce through, right, and slowing things down even more in Europe. So it's geopolitical week for me. I want to read up on all this stuff as much as I can. It will affect the overall picture.
It blows my mind. Look, I mean, I have a tough time sometimes trading just stocks based on daily movements and scanners and this and that. I mean, but scaling out and zooming out and taking a look at different markets, such as, hey, like China just opened at 4 a.m. What was that action like? Cool. How does that impact us? Like, I mean, that, because it ends up being a domino effect, right? So many times you see, I think it's called the Nikkei, that kind of goes down 2-3%. I remember back maybe 10 years ago, it might have been, where the Nikkei was dropping 3% every single day. Yeah. And I was like, cool, who cares? Well, apparently the U.S. market did, because they kind of reacted to that.
Yeah, yes, for sure. It's a chain effect. It's all related. It's a global marketplace. When you suggested copper, you could be sleeping and China announces, hey, we got this COVID under control now, so everything's cool. And copper's going to react, right? You're going to get a bump up here, in my opinion anyway, a significant bump up here. And even these markets that maybe aren't considered traditional, but are really tradable on the future side.
Got it. Well, let's go back to the ES if we can.
Yes, sir.
And I want to kind of look at any daily levels. I know we looked at intraday. We're looking at the 10-minute chart with the hamburger there, but I want to take a look at the daily and see if there are levels that you're kind of keeping an eye on. Because the one that I'm keeping an eye on is smack dab 4,000. That's what I've got. Just because it's a whole number. I like it. I love it. But I want to get your 2 cents on it.
Let's do it.
Anything else you're looking at?
Yeah, no, it's good. All right, guess what? 4,000 is right by that 61.8%. Now, again, these fib numbers aren't exact, and I don't think support and resistance is a number. I think it's a range. So this is good. This is a good thing. We're above that. We will be above the VWAP if we get to 4,000 from a target point of view. And I wouldn't be surprised if we do. But sometimes you got to set aside your cognitive bias, because we do. We all want this thing to go up, right? It's kind of a cognitive bias. We don't want our 401ks being 301ks or 201ks. So we have that planted. But from a charting point of view, I want to see some bodies of the candle, some closes above 39, 16, 17, 18, 19, 20, up in that area, above where my crosshairs is. I want to see some closes up here to give me a little bit more feeling that we could make it up to that 4,000 in a relatively normal fashion or not. I don't know. I just think there's tremendous resistance up here in my rectangle. It's tremendous support down here at 37.81. And I think it's a mixed bag on people saying, people being analysts and other folks saying, the bottom's in or the bottom's not in. I don't know.
Now, I want to kind of sharpen my skill set here, right? So if we could zoom out to where, let's say, November 2021 is involved. The way that I have my fib drawn is from the top, right, of the all-time highs, right around 48. Yep, all the way down to the 3600s. Now, is that a great way to do it, or what am I doing wrong?
Well, no, so
or does that go back to what you were saying? There's no science to it. It's all about seat time and what works.
Well, no, but what I would say is, yes, but what I would say is I just kind of modified the line according to how you do it. And so I see, there's a 23% retracement touching that 50% at the bottom of my rectangle, and a close above a 23%, 23.6% retracement on this duration of a chart is significant. So this is really important level. So I like what you did, and I could have 3 or 4 different fibs on here and looking at areas that converge. So I love that. I love the fact that you just pointed this out to me. I'm going to keep it 23.6 right here, 39.13.
Yeah, I'm trying to see. And then your 6180 is right around that 4,000 area. So that's what I'm going to keep an eye on there. Now, what about, let's go to the Qs. Are there any levels there that you want to kind of focus in on, especially with technology earnings, this, that, and the other?
Yeah, Qs are harder for me to figure out. So right now we have a little bit of you can call it an ascending triangle if you want. Whatever the textbook tells you ascending triangles do, throw that away,
Yeah.
because it could break up or break out. But there will be a breakout eventually if it continues. The most important level, we're right at it right now, 150. Let's call it 12,150. Let's see if we can get a close. And again, I'm going to draw a rectangle to make it easier for me to visualize it and think about it.
Yeah.
Just to kind of show you, I don't think support and resistance is an actual number. I think it's the range, especially in the look at this triple top. 1, 2, 3. We're kissing up into it again, but I really want to see a close up here. I mean, if we got a close at this, 12,244 number, then I would be optimistic that we could make a jump to the next level.
And then you would try to go along there. Now, if you were, would your profit target end up being around that 12,686 because that's where you got the 38.2 fib, or would you wait closer to the 1,300, which means 13,000?
Well, from a longer term trade point of view, it just depends on what your point of view is. Are you going to hold the trade for a week, for a month, or several months? If that's the case, then I think if you're going to hold it for a long time, I love, the top of this my C peak right here would be a good target. 12,929. That's just my and I roughly have my fib line tagged to that.
I got you.
So I'd want to see that inside fib, I call it, completed to see if we can get there. But again, it's going to be a rocky road. I don't think, Zunaid, I don't think we're going to have like just one shot at the title. I think it's going to be bumpy.
I've been waiting for 350s on the SPY, aka 3,500 on the Qs, but we've got a question here from Quantum. I heard futures optimizes use of capital. How do futures help optimize use of capital?
It requires less capital investment to control the same amount of notional value on a contract. So again, it's a double-edged sword, right? What I'm saying is you get more leverage, right, in the future side based on the unit investment. So be careful with that. It's a double-edged sword with that. But instead, it's going to cost you a lot more money to establish let's say a SPY index trade, SPY trade, than it would be an S&P 500 trade, because it's a different notional value. You control more market power with smaller amount of money in the futures market. And
of course, and correct me if I'm wrong, but I know you and I love this, is if you are just trying out futures trading, obviously, if you want to try paper trading, things like that, that's up to you. But when you get to real money, the MES is a better way to go, because each point is 1250. Is that right? 1250,
so
right?
The classic E-mini S&P, each tick is worth 1250. Right. The micros, each tick is worth $1.25. So you're absolutely right. And there's micros are your friends. I tell everybody this. So you got micros in all the stock index futures. You got micros in the currencies. You have micros in the Bitcoin. You have micros in the gold, micros in the copper. All of these markets give you the exact same market and pretty similar price action, with a smaller day trade margin and a smaller tick size. So you're absolutely right. If you want to get your feet wet and trade micros, you have all of the psychological ramifications of trading real money, right? As you take your first step into this, for sure. Great comment.
I totally forgot about micros, because I use MES on NinjaTrader's platform. What are the micros?
Yeah, so MES is a micro. It's a weird. I know it's a tough thing. It's a tough concept. So the E-mini S&P, I call them the classic, right? These were around since the late 90s, and it was kind of the pick traded product was a lot bigger, and so they created the E-mini, right? It was smaller, right. And that was kind of our main bread and butter for years and years and decades. And then they created a market that's 1/10 the size, called the micro E-mini S&P. I know it's a mouthful, right? So it's easy to get tripped up. It really is.
Yeah. Okay. Got it. Well, one last question before we head out. How liquid are futures? Especially, let's go with E-mini or the classic, whatever you want to go with.
Yeah, so many of these asset classes are very liquid. So just take a look at the E-mini S&P as an example. We have about 600,000 contracts traded. Bid-ask spreads typically one tick, right? So it's as tight as it could be. Typically, not always. You could get some slippage, but typically it is. And look at the micro NASDAQ, 605,000 traded already today. That's another one that has a lot of volume to it. and it has liquidity. The bid-ask spreads are lighter though, right? The bid-ask spreads are lighter though, so you might get a little bit of a bid-ask spread there sometimes, but it's very, very liquid. And just across the board, most of these are. Some of them aren't. You got to be careful on some of them, but generally speaking, if I see a contract that's doing over 30,000 a day, so 50,000 a day, it's pretty darn liquid.
Got it. Got it. Well, love it. That is Jim Cagnina, Senior Education and Training Specialist over at NinjaTrader. You can catch him every single day in the morning at ninjatrader.com/events. And they also have a stream near the close as well. Thank you so much, Jim. Appreciate it, man. We'll catch you next time.
Thank you. Have a good one.
Take care.